Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacquelyn Melinek, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Today's guest is Anand Iyer, the founder and managing partner of Canonical Crypto and a venture partner at Lightspeed. He has a very impressive background, so I'm excited to have him on the show. Welcome.
Thank you so much for having me. Excited to chat with you.
Yeah, to start off, I do my due diligence on every guest we have on. And one of the parts of that was actually looking at your Twitter. And I saw that you have the username AI. How did you get that username, and has like a bajillion people reached out to you to get it?
Yeah. So, before this started, we were talking about my name and how hard it is to pronounce. And, the lead into this is that my name's actually easier to pronounce, like in the eastern part of the world. We emphasize in the first syllable. I moved here to go to college, and literally my first semester, one of my professors was like, "Yeah, I can't pronounce your name. I'm just gonna go by your initials, AI." And being a part of a computer engineering program at Purdue, this felt very natural to me. So I have tried my best to avoid using my first name whenever I can. So when Twitter was happening, this was like, I don't know, somewhere between 2007 and 2008 or something like that. It's such a long story, but I'll summarize it by saying
we got time. Yeah.
I got the opportunity. I got the opportunity to meet the team very early because of some work I was doing at Microsoft, and I was sitting with some of the founding crew at their office in South Park, and they're like, have you signed up for Twitter? And I was like, I don't even know what this is. So they're like, oh, TWTR. And, you text this number called 40444, and they're like, what username? Do you want to sign up? And, yeah. Why don't you sign up? I'm like, okay, AI, not taken. All right, boom.
That's so wild.
I try to go by my initials wherever I can, but then I also like to claim now that I was early to this trend. So, maybe you
started the AI trend 100%. I could imagine there are some companies out there that like want to take that from you, but you should hold on to it. Yeah. There's been some outreach. Okay.
Yeah.
Aside from that, you are an investor across the crypto space, the tech space, etc. How did you kind of land in the venture capital world, and what interested you in crypto initially?
Yeah. In 2020, we'd started a company and we exited. We got acquired by a public company in 2018, which then went back private through private equity in 2020. And then, of course, COVID happened. I was having a little bit of an existential crisis. I'd spent so much time in big tech. I was a founder for 10 years. And along the way in that journey, there was a true fork in the road in 2012 when I could have doubled down and gone down the crypto path of like starting a company, doing something there. But, in full transparency, I didn't have enough conviction that that's where I should be sort of betting the farm. I'd been married. We were expecting our daughter at the time, and it felt like, okay, let's this risk spectrum. Crypto felt like the far end, and so I was like, okay, maybe we land somewhere not so far if we start another company. But so I'd stayed close to the world of crypto, and sort of like the tagline is that I'd spent all my time building our company and running that operation. I'd say that we'd spent, we didn't have a lot of liquidity, but whatever we had in that last decade, most of it went into angel investments in crypto, and I'd started to build a muscle for that. So now coming back to 2020, company's been acquired. I'm thinking about what I want to do with my life. And it just took me back to crypto because it started to inflect right around that time, if you recall. And I wanted to spend more time either as a builder or as an investor. And I started doing a little bit of both. And I realized that there's just a lot of opportunity to bring the expertise that I had as a founder, and especially having done developer platforms at a company like Microsoft, and just bring that level of rigor and product development to crypto. So the best way I thought I could scale is by starting a fund, backing founders, and sort of being this, co-founder, co-pilot as they get off the ground. So that sort of like maybe ties a bow on how this sort of coalesced for me back in 2020.
Yeah. And you've been in the space for a little while now. So how would you compare the big tech side of the world to the crypto world? What are like similarities and differences? I'm sure there's plenty, but from your perspective.
I would say that we do have some large incumbents now, right? Like in crypto, we have
Yeah, they came into the
Coinbases.
space. Yeah.
Yeah, and there's some precedent there, so that's good. I would say when you look at sort of like maybe the bifurcation in crypto is that like you have these decentralized networks that are sort of token driven, and then you have companies that where the token is not necessarily the revenue model, or there isn't a path of decentralization, right? And classic examples are like, let's say, Ethereum or Solana or any one of those decentralized networks versus Coinbase, or like a Fireblocks Chainalysis on the other side, Alchemy and some others.
Mhm.
So I think when you start to look at, and then there's so many other vectors that come into this, right? Like, how do you think about product development? How do you think about the time horizon to get something out there? How do you think about revenue? How do you think about an exit? And those are some of the vectors I think that start to look a little bit different. And commensurately, I think the talent pool also looks similar in that regard, right? So you have in decentralized networks, for example, historically we've had like faster liquidity paths, right? So what that means is like, the path to, getting to a token network, and which then yields liquidity back to, some of the founding team or investors tends to be a little bit more condensed. Churn commensurately with talent looks a little bit faster in decentralized network world. Whereas, you have a longer time horizon when it comes to some of these non-decentralized networks. Commensurately, talent accumulates there, stays there for longer. I would say maybe, one last thing, which is, I think if you just look outside of the crypto world, which is I think what you were alluding to, honestly, the kind of scale that I got to see at Microsoft, or through our experience having built a company, or even now when I meet folks who've spent time in Meta or at a Coinbase or any one of these large companies, like the kind of scale that you get to see, and by scale I mean like accessing, or the petabytes of data, transaction throughput, geographical constraints, regulatory concerns, like that kind of stuff is just like unparalleled. You learn so much from that. So, whereas I think you plow ahead in some ways in crypto because like some of these things tend to become a little bit of an afterthought, or you have like natural constraints that come up because we just don't have the level of like transaction velocity or throughput, or like the M in TAM is a little bit smaller, a few orders of magnitude smaller than it is like outside of crypto, and we are catching up, but it's very different. So those are some of the vectors that I think are like largely different. But I'll say this and I'll pause here, which I'm really grateful that over the years I've started to see talent just start to accumulate in the world of crypto as well, because I think the primitives that we've built are like awesome, and it's drawing a lot of people to really understand that they can build really cool things on top of these distributed networks. So hopefully there's more work to be done.
Yeah, I remember last cycle that was a big narrative out there, is like, if talent is being attracted to the space, that is a good and promising sign, especially if they're coming from, traditional banks or big fintech companies, tech companies, etc. Most people wouldn't give up a good job if they didn't feel confident in the industry they're moving to, right? Yeah.
That's right.
Do you think there's a world maybe within the next 5 years where crypto will kind of see the type of mass adoption that we've seen with big tech? Or is it not even in that picture? What do you think?
Yes, I do think so. Although I think it'll look a little bit different than maybe what we had initially projected. And to unpack that a little bit, for so many years now, and even starting the last cycle, we've been like, all right, there's this set of hurdles that you need to overcome to know how to interact. Like a human would need to know when you have to interact with these systems, with DeFi, right? All these steps. And we still complain about this today. We have this like grandma litmus test, right? Or parent litmus test, like they go through this. And we've all done this. We've all educated our friends and family in trying to know how to navigate these networks for better or for worse. But what I feel like will happen is these systems are programmable and programmatic in nature to begin with. And I think we should lean into that. And so when you look at steady state, 5 years, mass adoption, if the world is trending towards this direction of agents or AI driven systems that are sort of working on our behalf, then that paradigm should apply to crypto as well. So I feel like, and whatever that might look like. So if it's autonomous trading bots or systems that are working on your behalf, or agentic networks that really truly need to use blockchain primitives for data sovereignty or being able to audit how agents are operating, I feel like that could lead to this sort of mass adoption. So I think there's like this, I don't know, for lack of a better way, it's like, I don't know, we call it B2B2C, but in this case, it's like, there's a consumer on the back end, but like these agents are working on our behalf to really drive transaction velocity on chain. So that's where I think we'll be heading in the next few years. Maybe not in 5, maybe sooner than that.
Mm-hmm. Yeah, you brought up like agents and everything, and I wanted to talk a little bit about like artificial intelligence, the other AI, not you AI, and the integration of that with crypto. I feel like we're in extremely early days of that. I have talked about this on previous episodes about the integration of crypto and AI and how there is a lot of value in it, but there's also a lot of marketing and buzzword use towards it. Similar to what we saw last cycle, where everyone is, getting into NFTs or even like meme coins this cycle. Like it's just like a word you toss around, or the metaverse. And that's not to say there isn't real value in any of these categories. It's just sometimes people abuse them. Yeah. So where do you see value right now with AI and crypto? Yeah.
At a very high level, like I subscribe to what you're saying, and I feel like there's, narrative latching on, and in some ways we and I'll be the first to admit that I really want to see this work, right? Like I'm more glass half full than glass half empty, and the rationale for me is kind of like twofold. One, we started talking about talent, and the kind of founders we've backed specifically working on this domain, there's some of the most interesting and talented people I've met who've got like really deep research backgrounds in AI, and those folks coming in and leveraging blockchain networks to do things is really strong. It's a very strong signal for me. The second thing is, I feel like, and just segueing from the previous topic, the AI tailwinds are just too strong to ignore, and I feel like the utility of blockchain networks can largely be proven by AI. So with that as sort of the backdrop, while I think there's a lot of noises, like people who wishfully wanting to see this work, me included, I'm really trying to focus on the substance here. So now to land the plane, I would say that there's a few different areas where we're starting to see shoots starting to emerge, right? So I think that like very simplistic sort of like machine learning pipeline, there's data, there's this compute for training, and then there's compute for inference. Like that's sort of like the basics of it. And in the data subsector, there's so many things that happens from like collection of data, and there's interesting companies that are focused on that, including using crypto primitives, right? Like, how do you incentivize users to share their data with you, or how do you use blockchain data for training of models, right? That's kind of where the pipeline begins, to labeling of data. We have a portfolio company here called Sahara that was kind of early to the trend, and they're truly crossing the chasm, right? Whereas you have a lot of centralized companies trying to do data labeling. Sahara's leveraging the power of the masses, using a distributed consensus system to be able to label data, which is one of the first steps before it gets to being vectorized and stored and then used for training models. And then the storage, we have data storage primitives already on chain. And then now I think training has been where a lot of the focus has been for quite some time. And so we have networks like Akash, for example, that are like bare metal access to GPUs. This isn't an overnight success. This company has been around for quite some time, but now we're starting to see how they're credibly being used for, they have access to GPUs that are being used for training or for inference. And this is a hard problem, by the way, right? So it's not like, you can't trust that a distributed system will naturally work for training, but there are companies that are trying to take swings at this, either using paradigms like federated learning or sharding or continuous learning and so on and so forth. So that's another pocket where we start to see some investments start to happen. And started talking bottoms up more about the solution first. But the problem behind this is that, historically, access to high-end GPUs for training, for fine-tuning, for inference has been expensive and has been sort of locked to some of the larger players in the space.
Mm-hmm.
And by using latent GPUs, of which there aren't many to begin with, by the way, but if we can get there, then this would sort of unlock the ability to the average developer or the not the big five to be able to build models in a more distributed fashion. So I would say that's been the thesis. That's where a lot of the focus has been. Like, how do we really unbundle centralized AI, right? And that's where all these sort of like data pipeline training and inference and using systems in a distributed fashion really come to light. I'll pause there, but like that's where I see things working. I'd like to see more of like, agents proliferate and start to do work on chain. And I think we're maybe in the early stages of that. And I think these will have like compounding effects, by the way, because even the things that I mentioned are still very early in their life cycle. Mm-hmm. And I wouldn't claim it to be a runaway success yet, but the talent pool combined with the work that they're actually solving real problems. I mean, it's like one example here. There's a company called BrevDev. They're like a sort of a GPU aggregation network that they recently got acquired by NVIDIA. This was the turning point for me, and I was very happy to see this because of all the GPU networks that they could have offered through the network, Akash was one of them, right? So this was the only sort of like Web3 native company that was on this list, and I felt like that was one of the first times we'd crossed the chasm from Web3 serving Web3 to Web3 serving everyone else, right? Mm-hmm. So it's still early days, and I think I saw a stat that Greg from Akash had posted yesterday that their utilization rate on their GPU network had gone up to something like 34%. And so there's still, 66% to go there. But, it's a strong start. And so, because people are discovering that I don't need to think about, this isn't a Web 2 versus Web 3 thing. This is about access to compute or data that I can use for training models. So I hope we get there. And I think if we can cross the chasm, then the utility and the market that we can cater to grows quite a bit. So, I'll pause there, and I'd be curious to hear your thoughts or answer any more questions that can help clarify this.
No, I like your perspective on that, and I think it's so important to really like consider it from that lens. And you brought up centralized AI, and with the crypto space, especially for blockchains, it's such an emphasis on decentralization, decentralized technology, That's right. Building things without one superior power. And I feel like in the AI world, they kind of talk that talk as well. But we still see that a lot of AI models are, trained by certain areas. I think you would be able to explain this better than me. But no, they're trained by certain models, certain data points, etc. Maybe they're encouraged not to say X or Y or, whatever it may be. But do you see the AI space really wanting these models to become decentralized? And if not, what would it really take for us to hit that point? This podcast is sponsored by Galaxy. If you're immersed in the world of Web3, Galaxy is a name you need to know. As a decentralized super app with an impressive 21 million users boasting over 100 million monthly transactions, Galaxy is elevating its impact with Gravity, the magnet chain for Web3. Gravity is designed for full chain abstraction, zero knowledge proof-based privacy, and rapid transaction speeds, all coming together to offer an unparalleled user experience. Gravity opens the door for developers to effortlessly build on the largest on-chain distribution platform, and for users, it promises an even smoother, more secure journey through Web3. It's not about being on-chain, it's about being on the right chain every single time. Galaxy is on a mission to onboard the world to Web3, and Gravity is the magnetic force that will propel the vision forward. Ready to launch your Web3 journey? Build the future on Gravity. Visit gravity.xyz for more information. I think this is the point, right? Like, which is when you, just to zoom out for a second, whether it's for me or others who are like really building and wanting to see movement in the space, there's
there's an opportunity cost, right? Like I think maybe I don't mean to sound like a doomer when I say this, but
it's all good.
If AGI is like it's not as far away as we thought it is, right? Which is why when you asked me about like what the horizon looks like in 5 years, I think I can look into maybe 2 years, and then beyond that, I feel like the way the pace at which things are moving is so incredible. Or maybe I'm here in San Francisco, the Kool-Aid is like injected directly into my veins here, right? So it feels like we're moving really fast, and so if let's say that's the time horizon, and this could be the last thing that I credibly do in my career, because maybe AGI really revamps how we think about everything, including how we spend our time. Impact is like really paramount for me, and so spending time in this space and ensuring that we're creating a future that we're all like really proud to be a part of, not just for ourselves, but like for me, for my daughter, for our children, for our future generations. Like this is really important to me. And intelligence is like one of those really interesting primitives. Like this isn't just about aggregating search results and directing you to a website. This is about reasoning. It's about logic. It's about, trusting a system that can be your right hand to do certain things for you. And we're starting to trend in that direction. So, if that's the future we want to live in, how much of this do you want to trust centralized systems to operate and run in a closed manner?
I would argue you
not
don't.
Having transparency.
Yeah.
Yep. Yeah. I'd agree. And it's and it's so many such questions involved, right? Like one of the theses behind blockchains, and you've been in this world for quite some time as well, is that, these networks are long lasting, right? Like as long as decentralization exists, these networks don't go away. They won't die. And whereas if you trust a centralized company to be able to manage your data or to be your personal assistant, and then that company shuts down one day, what happens to data? What happens to your trust and all these sorts of things? So for so many reasons, transparency into everything from how it gets built to how it's serving you is important. And I will admit that moving in a centralized fashion has its benefits in that, like, you can move really fast, you can raise a lot of capital, you can get to this point. And we wouldn't be having this conversation, I think, if it weren't for the fact that some of these companies and models have plowed so far so quickly. But this counter narrative needs to exist for every Windows has been a Linux, for every iOS is an Android. I know some people hate that analogy, but I feel like this open source, transparent primitive needs to exist. And with decentralization is like one of those core tenets. And so that's sort of like, I think, what the fight is really about for me and for us. I feel very strongly about this. And so, yeah, I'd say that brass tacks, the very transparent, open manner in which these models get built, how the data gets sourced, to your point, how do data creators get compensated for the work that's gone in to create this data? Like super random, but like I was using a popular model the other day because we just got our dog back from the border. I'd done a query. I was like, oh, my dog's not eating, and I got this result, and I was like, oh my God, I swear I've seen this. And I know it sounds so weird, but I've seen this exact text. And then I did find it on like a Reddit forum, and it just kind of connected.
Yeah.
And so it's natural, right? Like someone had posted this very credible response, and I should tweet about this. Okay, it's like my flag.
Gotta get on AI.
Wow, yeah, exactly. And so the fact that someone has made this data contribution, there was a very credible response that's now being served. And the creator's response maybe didn't put a lot of thought into it, but there's so many examples of this at scale where like it'll really start to matter, where there's human intelligence is being used for reasoning across the board. How do you compensate for that? And how do you trust it? How does it operate in a transparent manner? And how do you ensure that these things are long lasting and working for you? So these are some of the things that I feel like blockchain networks can organically provide that I'm hoping we can sort of move towards. And I think we start to take stabs in that direction.
Yeah. I feel like there's a lot of sectors in AI too that you can invest in. And I'm going to use that as maybe a segue into talking about Canonical and like your fund. It's $20 million early stage focus, launched 2 years ago, I believe, if I'm correct.
That's right.
How has the strategy there evolved over time? What is the focus today? compared to maybe 2 years ago? I know a lot of VCs like to say they keep the same strategy, but environments change, and it's okay to say, hey, maybe this market cycle I'm focusing on this versus the previous one.
No, totally. And I think, I'm a first-time fund manager. I'm still learning a lot. Mm-hmm. And I would say, within the first 6 months of the fund's existence, a lot changed. I think it was May of 22, we had Terra Luna happen. Mm-hmm. And later that year with FTX happening. One of the learnings that I had, and I would say that I exercised from having been a founder, and I still am a founder, right, of a fund, is that, it's really important to know how to zig and zag. Like the biggest thing, one of the skills that is important to look for in a founding team is just adaptability, coachability, and I needed to adapt, right? Because we had this, hey, we'll back awesome founders who are building great blockchain infrastructure. It's like, great. That sounds like at a 20,000 foot level, that sounds awesome. But what does that really mean? Mm-hmm. And I needed to really go back and really break that down in terms of like what that means for me. I'll boil it this way, there's this thing called, this Japanese concept called ikigai. I don't know if you've come across this, right? Like, what are you really good at? What does the market really need? What can you monetize? And like, that sort of like Venn diagram, that intersection, those three sort of like where you should be focused. So I kind of had to go back and do that just as we kicked the fund off. And AI tailwinds started to happen. I started to meet some really cool teams like Jensen, which is one of our portfolio companies. It was the first of these where they're like, it really feels like AI is here. Like it could be happening. And it really forced me to develop a thesis around AI crypto. So long way of saying that we were focused on any product where it felt like the end user would be a developer. Like that was the initial thesis of when we launched the fund, developer platforms. And we've now become sort of very focused on AI crypto, where like I'd say that's where I'm spending all my time, because I think there's a lot to unpack here.
When was that conversation with Jensen?
Summer of 22.
Okay. All right. So it's been 2 years, How do you think everything has kind of shifted over the past 2 years? Or not shifted, but again, like I keep using the word evolved because I feel like so much could change in such a short amount of time, especially in both the AI and crypto industries. Things move really quick. So what have been like maybe the biggest things that you've noticed since then?
The narrative's gotten quite strong. And there's many ways to measure the signal. Like one of the things I like to joke about is that I think the summer of 22, is that right? No, summer 23, I'm sorry. Summer 22, AI crypto wasn't a thing. And I think summer 23.
Yeah, it's just bankruptcies.
Like it eats. Yes. Eats CC. I think there was like maybe one focused track on AI crypto, maybe a couple of side events. And then summer 24, this Eats CC in Brussels, I would say, I don't know, a few dozen events, a couple of dozen events focused on AI crypto, so many tracks, so many folks, so many investors excited about it, so many builders, like rooms were packed. And so I'd say that's a signal. So that's one. And talent, more companies have been getting built there, more funding's been happening in this regard. Maybe one of the bigger sort of things that happened was like, I think BitTensor, which is, I'd say really got into the limelight in late 23, maybe as like with Sam Altman and that whole shuffle that happened right around Thanksgiving of 23. It really like shined light on like where, decentralization should be a bigger part of the narrative. And of course, there's so many things that have happened since then around alignment, security, so many of these things. So I would measure it by, what events have happened outside of the crypto world, and then commensurately how much activity has happened, whether it's just pure talent flowing in, companies getting built, VC funding, and overall chatter. But of course, with that comes some grifting as well. So I will caveat that.
Of course,
it's not all rosy. Yeah.
No, of course not. When it comes to investing across the space, how would you describe the state of crypto VC right now? And where are you seeing the most funding, least funding? Let's say like the most recent quarters.
Yeah. I mean, statistically, I feel like, and I look at the data just to keep a pulse on it, which is, I feel like things have been very steady. If I look at sort of like Q1, maybe Q4, Q1, Q2, I feel like it's been, I could be misquoting the stats here, but like somewhere between like 2.5 billion in the last 3 quarters, consistently each quarter, I think, if I remember correctly. And within those subsectors, I'd say maybe I need to check my facts, and maybe about 50% of it is quoted as like infrastructure, some amount of DeFi, so on and so forth, right? So this is like high level. I take a slightly different approach, being the small fund, and goes back to this ikigai conversation, which is like, where can I really focus? What can I be, what can I be good at? I like the earliest stages because I've been a founder. I've kind of realized that that's where I can provide the most amount of value. And I tend to gravitate towards very strong technical founders who have a line of sight into what go-to-market looks like. And so I would say from our fund's perspective, like it's been very steady. We've been leading some rounds in the AI crypto intersection of the pre-seed and seed stages. And I've been kind of staying true to that north. And I'd say once a quarter, we've also been incubating a company. And so, sorry, this isn't me directly answering your question because I'm trying to I'm not trying to follow the trailing data, but trying to create some data and move in where I think the puck might be going and trying to make some investments there. So, for example, one of the companies we incubated, so to speak, was a super fascinating company that's like, again, where I think the rubber meets the road. They call Bitmind. They're a deep fake detection platform that's built on the BitTensor subnet as a BitTensor subnet. So again, it's the economics of these platforms just make it so viable for us to build things like this that has historically been hard to do. So I'll pause there, but I'd say that we've been steady over the last several quarters, and I hope to keep it that way. I'm not trying to time this based on cycles or other overarching events.
It's a very good move to go to metrics and data. But I think, I guess following that question is, there's a lot of areas that get a lot of attention. There's a lot of builders in certain sectors. DeFi, consumer apps is a hot topic right now, infrastructure. People talk about a lot of these things. But what do you think is one of the Web3 sectors that deserves more attention or that you would like to get more pitches to your inbox about?
I have a wish list, and I should get
share the wish list.
About furnishing some of these. So at the highest level, I would love to see our primitives getting used. And I think I was sharing this a little bit earlier, using all these primitives for like non-crypto use cases, because a lot of DeFi stays within on-chain ecosystem, and it's absolutely viable, right? Like you kind of have to make the shift over into the blockchain world, and DeFi becomes a very natural fit for you. I think a lot of these primitives can be used for non-core crypto use cases as well. So this is, for example, I've been rethinking or wanting to jam with someone on how we rethink primitives like insurance, for example, for just not crypto use cases, but like off-chain use cases, right? Every single one of these, maybe starting with insurance for AI, which I think is like a really fascinating area to kind of unpack. Again, there's so much I can talk about that, but I won't bore you with that. I think there's also this, we talked about AI a little bit, but, at steady state, we talk a lot about like UBI, right? Like as it pertains to where AI supersedes and we think about the pervasive nature of AI across the board and what does that mean for human purpose. And so we talk about universal basic income. And I think there's, to me, it's a little different. So I have like a strike through, at least in one of my, it was like, it's not universal basic income, but maybe it's universal basic intelligence. And how do you get everyone to be able to access intelligence? And what are the gets associated with that? Because, again, money might mean, money could be construed differently in a world in which AGI is more pervasive. So that's another sort of like interesting thing that I'm thinking about. And, again, using sort of blockchain primitives. So I know these are like very specific nuanced topics, but it's not an area like you'd asked about. But I feel like these all sort of revolve around AI crypto. So sorry to continue sounding like someone who's like banging this drum, but I'm just like super catalyzed by what we could do here. I think privacy preserving ways of interacting with AI, with various AI models is like a very interesting concept as well. And so both from a training of models perspective, but also using for inference purposes. And there's so many different ways in which we can go there. There's a whole like mixture of experts concept that I'm like really fascinated about. Like, how do you use different models and your private data to be able to really have an agent work for you across various models? So these are some topics that I'm like really excited about. And I hope to see, this is sort of like taking the base layer of like what the Jensens, the Rituals, the Valence, and Saharas of the world have constructed, and sort of building on top of them to provide utility outside of crypto. Like that's where I would say if my call to action would be is like, how do we build products for non-crypto users using what we have on blockchain rails? That's my ask.
That is a super important question, and whoever figures that out will do very well for themselves, I'm sure. I also think on everything that you talked about, there is tons of opportunity there. And, you have experience building and scaling companies. So like, let's say someone's listening to this, they're like, okay, love that idea. But when it comes to like early stage crypto companies or crypto AI, however we want to look at it, what are some elements that you think the winning teams are getting right? And then maybe what are some elements that people who are struggling with are getting wrong, especially as like you deal with founders, you deal with companies like day in and day out?
Yeah, it is. I would say this is I don't think this is like really necessarily pertinent to crypto AI, but as in like just having line of sight into knowing who you're building for, and just having those questions answered early and validating them has been like really fascinating. And again, this is hard to do sometimes when you're really trying to build for a future that's like 6 to 12 months out, right? Because again, the classic, like, are you building for today? Or are you building for the future? But I think the teams that get it right have that line of sight into like, hey, this is kind of where the puck is going. And these products take a little bit of time to mature. So we're not trying to solve the here and now problem. We're trying to solve a problem that's, looking out into a little bit of the future. So I think that's paramount, but also knowing what questions to ask related to that, I think is difficult to do. So I think the teams that are doing it right kind of have been focused on that. That's number one. The second thing is, and this is just a part of my rubric, you have to have this level of adjacency to the problem you're trying to solve for. Like I couldn't go build, a biotech device. Like I just don't have the background for it. Nor will I try. I can't build an EV, and so knowing what you're really good at. And by the way, there are some incredible founders out there, like, who can truly, like, they're you throw any problem at them and they can solve it for you. There's Elons out there who can do that.
Yeah, but if you have like a specialization, I get what you're saying, right?
Yeah. So focus on your strengths, because then, those problems will, you can associate the problem and the solution very easily. I think they get it right. And I think sometimes when you deviate too far from that, it gets really hard to, you try to sell to an entity that you don't have a lot of experience selling to. Those kind of things get really hard. So those are some things that I work really well. And of course, the level of conviction that comes when you have this sort of formula, when you go pitch, when you talk to talk to investors, you talk to customers, that just, it goes over really well. Last thing I'll say, and I said this at a panel in ETC, and I realized that I haven't really articulated this out loud, but the most formulaic thing that I've seen work in crypto, at least, is, and I think this applies outside of crypto as well, but at least in crypto, knowing how to, like, and this may sound controversial, but knowing how to be a cult leader is standing out as like a very important facet, right? Like, because you believe in what you.
I was gonna say, I get what you're saying, even if it's controversial to use that term. Go on.
Yeah. It's just it's standing out as like is one of those like building blocks that I think is necessary. And I'm not, you have to be, you're loud, you're vocal, you're occasionally controversial, but you're just so deeply rooted in what you're in what you're building and believe in. But again, you don't want to cross over into that chasm of like, of collateral damage or things you're saying that just are truly negative, but it's truly about the positive, and like you believe in what you're building so much that this is your reason for being, and this is why you were here, you were put on earth to go build this thing. Like that just comes out organically when you talk to some founders who are like, who truly believe, but they're also able to get this following behind them of people who want to work at the company, who want to build for them, who want to be a part of the community. You want to be an investor because like, I believe in this so much that I think this person's just going to get it right. So that's another facet that I think is starting to stand out as something I look for.
100%. No, that makes a lot of sense. Before we wrap things up, last major question for you or request. Can you leave us with a piece of advice, something that you've carried with you throughout your time in this industry?
This is me, and I look for this reflection in folks I like to work with, and this has become really important to me over the years. Is it's operate with high integrity, and it will it'll pay back in ways in which you just wouldn't have expected. Everything you do, and set a North Star for yourself in terms of how you want to operate, how do you want to conduct yourself. I tell my daughter this as well, and as much as I tell her this, I'm telling myself this because the implications of you as a founder or you as an investor or anything credible that you do and you impact the world around you, operating with a sense of creating something that's going to last, right? Like knowing that you want to have this level of impact, but operating with a sense of integrity, I think you will just operate more functionally and more credibly, and you'll be proud of the work that you do. So yeah, I know it sounds a little nebulous, but it's sometimes you can get lost in narratives and seeing things on Twitter or on other platforms where you're like, oh, I kind of need to be this way, or I need to articulate things this way. But this has become important to me, and I feel like it's generic enough advice that I hope others will be able to latch onto as well.
Oh, I love that. And I agree. Integrity is so important, and morals and all that stuff. So definitely agree with you on that. Well, thank you so much for coming on the show today. It was a pleasure.
Thank you so much for having me. It was a lot of fun.